from Galaxy Research. Yo, I'm shooting every shot like my name was Jack Reacher. Incredible, indelible teacher. Free speech, maximalist preacher against the Jekyll Island creature. Yo, I'm back, baby, watch. There ain't no way to stop. See me cooking up this bread, cause I'm rising to the top. Never looking to be fed by a hand that isn't mine. When I rhyme, I'm never dead, like I'm pervious to time. Yo, intelligent design, see me flying like a sparrow. Started from the bottom, now I'm here like Darrow. Yo, I'm harnessing the power like Severo and the Howlers, and I'm blunt with the truth, but keep it pointed like an arrow. Yo, I'm spitting fire on the mic like I'm puking cayenne. Pepper on the beat like my homie Lucas Tcheyan. Dapper when I'm speaking, freaking light it like a beacon. Bleeping brighter when I sneak and throw you people in the deep end here on Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. Lucas Tcheyan from Galaxy Research. He will join us to talk about what's happening in the Solana ecosystem. And of course, we'll check with our good friend, Beimnet Abebe from Galaxy Trading, as always, to talk markets and macro. Before I get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Wow, we're back, Phineas. We're back in the studio. Last week, we were at PubKey NYC, my favorite venue, with good friends of ours, Nick Carter and Matt Walsh from Castle Island's On the Brink podcast, for a live show. That was our first live show.
Yeah, Galaxy Brain's first live show. What'd you think?
I thought it was a lot of fun, and it was well attended. I mean, I think people really enjoyed it. You know, you get Nick. Nick is a funny guy, and and Nick and Matt together are a great combo. I was very, proud to work with those guys and be up there with them, because we've talked about this. I don't want to belabor the point, but I love their podcast. I thought it was a really fun thing. James Seyfarth from Bloomberg Intelligence joined us. Thomas Pacchia from PubKey came up as well, and you can see that. It's on our feeds. It's on our YouTube channel now.
It felt like the community really coming out. The New York scene was there in numbers, and people participated, questions, and PubKey was a great host. What a fantastic venue.
Amazing venue, awesome food and drinks there. I mean, it was just a good time. I mean, I don't know. I mean, what do we think? We got to think of our next, maybe
you want to do it again?
Yeah, maybe first PubKey next, Yankee Stadium? I mean.
Yeah, that's what I'm saying. Like, you felt good. You sort of emceed a lot, and I was curious to how you would enjoy it, and it seemed like it was a good time.
I thought it was a good time. Unfortunately, for listeners who were not present, you don't get to hear the musical collaboration that Nick Carter and I did.
That was live audiences only.
Live audiences only. So try to get out next time, whenever that is. I mean, it's not on the schedule, but I think we're going to do it. I don't know. I thought it was fun. It was a good time. Everyone check that out. For now, let's check this show out. Let's get right into it with Beimnet. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, thanks for joining Galaxy Brains.
Thanks for having me.
Saw CPI came in soft.
Soft.
Things are changing out here.
They are. We talked about a little paradigm shift happening in the data.
Last week we talked about it, yeah.
And so, what we saw from the CPI report was, a decline in prices on a broad-based way. I mean, the headline number came in flat. The core CPI number came in at 0.2. These are all indicative of what we like to call a soft landing. Some of the components in particular that drove some of the weakness or the softening was you had owner's equivalent rent declined to like 0.4 month on month versus like 0.6. The services started to cool down a little bit. Airline fares came off. Energy prices have been cooling, not in the CPI, but like if you just look at gas prices over the past 9 weeks, they're literally down 9 weeks in a row.
Like crude, basically.
But what people pay for at the pump.
Oh, wow.
Crude's been down
are
as
they?
well.
I don't really drive a lot anymore, so I don't really know.
I think the national average is probably low threes.
Is there even a gas station in New York, in Manhattan?
There's like 5.
In all of Manhattan.
But no, it's tough to get a sense. But high level, it seems like the prices.
But that's important. The gas price is a true metric for Americans.
No, absolutely. People spend money on that.
It costs money.
Yeah. Absolutely, and why we strip it out because it's volatile? Like it's absurd. It's
that
nonsense.
Whole thing. Krugman is always saying this, right?
Measure the inflation. It's like you always care about the rate of change, not the price level. Like it messed up. And like you have any idea how far behind the curve that those figures were when inflation was like 13, 14, 15%, and they're telling you it was only 8? like the figures are absurd, and like you need to adjust them for the 21st century, and we don't, because it's the Fed and all these people are just an academic institution that's been around doing the same stuff,
want to keep it the
models,
same,
basically for the past 40 years, and now that they missed catching the inflation story, they're more focused on like anecdotal evidence and high frequency points. But high level, it's still nonsense, and you can parse the data however you want. But I think the most important thing that the market should really think about is the last mile in terms of getting inflation under control is typically the toughest. That's what history tells us. And given the price reaction that we've had in markets since that CPI report, I think that's abundantly clear. Just to give you an idea, yesterday was one of the largest loosening of financial conditions of the year. And I think going back a couple of years. But high level, I mean, just to give you like a couple of bits of information, like the Russell was up almost 5.5% yesterday.
Wow.
Oh, like literally its best performance of the year.
Yeah.
Right. And NASDAQ's, back to trend highs almost. S&P's 4,500 and change. Bonds have rallied to 10s are 450. There's inflows into high yield bond ETFs. And so what you're seeing is folks going really out the risk curve and buying, junk, going out the risk curve in terms of duration and buying, longer dated paper. And that's kind of what happens when the market gets a sense that the Fed's turning a bit or the data's turning a little bit. And what is that? That's inflationary, not deflationary.
I see. This is why the last mile is so hard.
Because it becomes such a push-pull.
Yeah, you get the good news on inflation, which makes people go out on the risk curve, which can increase inflation.
Correct.
So it's
most directly is like you had mortgage rates drop recently by like to the tune of like 25, 30, probably a little bit more now, 30, 35 basis points. And once you had those mortgage rates drop, what happened? Mortgage applications shot up. Right, till the highest level since June, right? So what's going to happen if mortgage rates fall? Oh, wait, people are going to be like, oh, maybe it's...
Housing market's going to tighten again. Everyone's going to pile in.
Right, and so it becomes such a push-pull. And what we have to keep in mind is that, like, one of the things that people don't even talk about that's a huge thing is who's going to be doing layoffs in these large multinationals when their stock prices are close to the dead highs? Wait, you're going to feel the need to really like let go of like 10% of your workforce when your stock is, within 5% of all-time highs? Like it's so difficult to, and these people at the Fed, they're so concerned about breaking things. Like when 10s were breaking the 5%, like everybody knows the fiscal situation's messed up. Right? Like you got to let that stuff run. I think if you want to get back to like some place that's reasonable. But right now, what it kind of seems like is risk markets are going to rip. People long risk assets and bonds are going to do well. That's going to be inflationary. Nobody's going to get laid off. And 3 months from now, we're going to be like,
inflation's back.
Inflation's back.
Yeah. This is the big fear. This is the Paul Volcker era fear.
Yeah,
they did this. They did a whole cycle. I forget how high it got.
They don't have
and then they cut back.
Courage to really kill inflation.
Yeah, which would be raise it even further. Keep raising
6+%.
Not higher for longer. No. Higher for longer, and even higher from here for longer.
Correct.
Yeah. And I know Jay Powell is very concerned about that. I mean, but apparently not enough. So is your point.
Like not concerned enough.
Yeah.
I mean,
but he
the market,
said that
the
Paul
market's
Volcker
not
was
even
his
buying it. There are 100 basis points of cuts to jam.
I was looking after the CPI came out yesterday. The cuts, I think, literally the day before. It was 25 bips of cuts by May.
Yeah.
But still even some increase priced in before then.
And now
it's just flat and down cuts in March. Again, according to this is how the market is pricing it. 28 bips of cuts when I looked this morning in March is what the market is expecting.
Yeah.
So I mean,
which is absurd to me.
That seems.
But you have to price in some kind of like, premium or discount because they'll go 50 or 100 when they go.
Right.
And the risks are.
But it is a disconnect between, I guess, higher for longer doesn't mean no cuts. It just means that we might stay overall higher than usual for longer.
Correct.
But it is a disconnect between the market and the Fed's language, right?
Correct.
The market is basically calling the Fed's bluff, they think.
I agree. So here's why that friction exists is one, for the effective implementation of monetary policy, the Fed needs less cuts baked into the market because they need money to flow out from the very front end into the rest of the curve because we're issuing so much debt and paper that they need people to buy it. People won't buy that stuff if it has a lot of cuts baked in. They'll just keep the money in the front stuff. And so for the smooth implementation of monetary policy, they actually need less cuts priced in. In addition, right, if you're the Fed, you need to preserve optionality. You need to preserve the option of hiking again, right? You don't want to shock the market with a hike. And so that's why they're constantly on the more hawkish side, it feels like.
Yeah.
But the other thing that you're pointing out as well is, where is neutral inflation now? More and more, it seems like the inflation expectations and realized inflation is kind of hovering around this 3% area, the low threes, instead of this 2% target.
Right.
And so there may be a rebasing of just general level of inflation happening across, the economy in terms of a quote unquote like new normal.
Yep.
Right. And that's what you're seeing in some of the inflation expectation data as well. Like the UMISH, which is really volatile, and you got to caveat it a lot. But anyway, those like 1 year inflation expectations are like on a 4%. And people that have gotten used to just higher and higher prices, they get accustomed to it. And they're like, oh, it's time for a raise at year end as well. And it becomes entrenched. And so the fear is that, inflation might be entrenched around 3 to 4% now. Which means that interest rates are still too low in that context.
Yeah.
And so I see all the soft pieces of data turning in the economy. There's like a freight crisis. There's
I saw freight and truck driver. Someone had the chart of the truck driver layoffs, and like the only times it has gone negative, it's been in a recession 100% of the time or something.
Yeah. No, and then also, I mean, just anyone in the lower income quartiles, right? They are getting eaten away at by just the high yields, right? And they just don't have enough disposable income to survive in this kind of environment. And then you get trapped in a debt cycle, and you're seeing, non-performing loans tick up, and like default rates of like lower credit score people tick up and stuff. And so that's where the pain is in the economy.
And there is
right
pain,
now.
and these are folks that don't have investable money, right? So they're not able to hedge by owning, assets even by buying the yielding debt, right? So they're just seeing it at the pump, at the supermarket, right, at the retail stores, when they travel for holidays, like that. They're bearing the brunt, right? That's why we often say that inflation is like a tax on the poor primarily, right?
Exactly.
Wealthy people can pay 5% more for their food.
Yeah, wealthy people are earning 5% on their checking account, and their 401ks are back to close to trend highs.
Right.
Yeah.
Beimnet Abebe from Galaxy Trading, my friend, thank you so much for coming on Galaxy Brains.
Pleasure.
Let's go now to our guest, Lucas Tcheyan from Galaxy Research. Lucas, welcome back to Galaxy Brains.
Thanks for having me.
Let's talk about Solana. It's an iconic and technologically differentiated blockchain, which is one of the reasons I've always been interested in it. Unlike Bitcoin and ETH, it is not an Ether. It's not pursuing a scaling by layers methodology or modularity sort of design. It is the iconic monolithic blockchain.
Yeah.
So it's one reason I've always been interested in it, but also you were just at Breakpoint, their big annual conference. What was it like? What were your impressions?
Yeah, I mean, so Breakpoint is the annual Solana conference that's held once a year. It was in Amsterdam this year. I personally was very impressed. I think we're in an environment where people are starting to get a little bit more interested in crypto more generally, and you could really feel that there was an energy there, not just from existing people working in Sol, but people outside the ecosystem who were starting to notice that maybe there's some real activity going on here. I think for me, like the three major components I look for in any chain to see if it can continue to grow and build products that people want are, what is the developer community like? What is the social layer like? And then what's the technology like? And I think for Solana, you've got a very differentiated tech approach. It's a monolithic, or people are calling it integrated chain right now. It's got a very different narrative from something like Ethereum and Bitcoin, because they're specifically saying, listen, we're focused on execution and scalability above all. Bitcoin is a store of value. Ethereum could be a high value settlement layer. We're going to be where people build products and where those products can be cheap enough and fast enough that a lot of consumers want to use it. So I think collectively Solana's got that differentiated tech. It's got a very devoted and committed developer community. That was very evident while I was there. And what you hear talking to a lot of these teams, which I think is important, is like for them, this is really just the beginning. You know, they feel like in the wake of everything that's happened over the past 2 years that Solana has really been underappreciated for the developments that have happened on chain and the type of products that teams are building. And they're angry and they're hungry and they want to prove people not just that, you know, Solana is a good chain, but that Solana is a chain where only certain products can be built and they need to be built on that chain.
Interesting. So hasn't Solana had major technology problems? I mean, I remember seeing, it seemed at some points it was like every week there was an outage.
Yeah.
When the whole blockchain basically went down.
Yeah.
Is that still true? I mean, I don't follow it. So, I mean, like, isn't that was a problem? Is it still a problem? Like,
yeah, so there's definitely been massive improvements. So over the past, you know, we're coming up on now 3 quarters where Solana's had no performance degradation, no downtime issues. And that's, I think, a huge milestone for the Solana ecosystem. And what's interesting to me is it's not just that like there's not a lot of activity, so the network's having a problem. They have implemented tangible updates that are improving the network.
What do they do?
Stake-weighted QoS. So basically, depending on the amount of stake that you have, it increases your chance of being able to include a block. That helps deal with spam issues. Quick, it's another way of basically throttling all these bots that are spamming validators so that, you know, they don't get overloaded and they don't shut down. You have local fee markets. You know, this is really dealing with hotspot issues that you see on Ethereum.
Because that was one of the things is there was no fee market at all. And so I remember looking at Solana's overloaded spam issues being like, gosh, if only someone had come up with a way to defend against Sybil attacks. Oh, wow, it's fees. It's always been fees, right? Like always has been. That's how Bitcoin and Ethereum, that's how they all prevent spam, basically, right? They raise the cost of transacting. But it had no fee markets at all. So did they added fee markets?
Yeah, so they added localized fee markets, which is saying that on Solana, when a transaction happens, it points to exactly which state that it touches. And so as a result, they're able to parallelize their transactions. So instead of like Ethereum, where you only have like one thread of transactions coming through, on Solana, you have kind of 4 threads right now. And so say that you are trying to buy an NFT and there's thousands of other people trying to buy that NFT. And then there's another person who's just trying to, you know, swap some tokens. And there's nobody else trying to swap those tokens. The people who are all trying to buy the NFT, they might see their fees spike because they're all trying to touch the same state. But the people who are trying to swap the tokens, they're not going to see any fee spikage. So it really makes like discrete fee markets that prevents, you know, a hotspot in one area of the network affecting the whole network.
Like I'm thinking of the what was the Bored Apes token that they launched?
Ape.
Was it Ape? Yeah, when they did the mint for Ape on ETH.
Exactly.
Just like destroyed the entire chain basically for that day.
Yep, exactly. And we saw actually earlier this year in May or so, there was a huge NFT mint going on at the same time that a major deepen protocol was bridging over or basically transplanting their whole protocol onto Solana.
So they had a lot of activity too.
A lot of activity. It was totally fine.
So these are just then 2 separate threads occurring at the same time with different fee markets.
Yes, exactly. And right now it's 4, and you know, over time as hardware improves,
could be more.
It could be a lot more. I think, you know, Solana TPS that's like kind of one of the big value propositions. Say it's 400 transactions per second. This past weekend, we started to see some considerable increase in on-chain activity. And what I was particularly impressed with is not only that the network was performing just fine, but we also saw TPS begin to move up. So it was at 400. It slowly started to creep up in the 500, 600 range. And then we were at some point seeing, you know, 600 to 700 plus in TPS. And it really just shows that the network can handle more. Over time, it's going to continue to be able to handle more. And this is really just the beginning. So the technology updates have really, it seems, had an effect and are starting to work.
So it's exciting. I think it's quite interesting. I mean, it's just a totally different technology, right?
Yes.
In the scheme of things. I think, you know, the way you describe, you know, Bitcoin as a store of value, I would more say is maybe call it like mostly a monetary network.
Yep.
Ethereum, as you said, high value settlement layer, which I think is right. I mean, if you look at the majority of DeFi and NFTs, all the biggest pools, the most valuable projects, they're all on Ethereum, right?
Yeah.
And to me, when I think of like Solana, one of the issues that I remember was, I think it was originally the idea, or I don't know who promulgated this idea, maybe you can tell us, but like that it was going to be like central limit order books on chain, right? That it was being built.
NASDAQ on the blockchain.
Yeah, like where did that come from? Was that what Anatoly said?
Yeah, that was kind of Anatoly's original vision, because he has, he has this story about how he was like trading using like normal, traditional finance.
But that can't happen with downtime. This is one of the main issues, right? Like if you had money in a DeFi, let's say you had a loan, right? And you're gonna need to top up the loan, perhaps, because let's say the market moves against you, and you got to put more collateral. But if the network goes down, you can't, right? And you end up literally getting rugged. And so that was a major reason, I feel, that there was like almost no assets in DeFi in Solana for a long time. Is it still like that? I mean, because there's genuine risk there. Like literally any. When do we think outages happen? Well, they typically happen during big market moves, right?
Exactly.
So like that's when it has to work, and it hadn't during some times, and I feel like that's a huge impediment for financial use cases on Solana.
Definitely. I mean, even myself as, a huge Solana user, like I don't want to feel at any moment that I might not be able to access my assets and use the chain. And so I think as we've seen from, this past weekend was a great test. We saw, volumes on Solana pick up immensely. Solana DEX volumes this month are about to breach all-time highs, and we're less than halfway through the month. So that was a great test of the network, and there was really no degradation issues. And as I said, TPS actually increased. Over the next, probably year or so, timeline's not exact, but we're also going to see a new client, a validator client, come out called FireDancer.
Yeah. And so this is Jump Crypto's technology, right? So this is there'll now be two clients.
Two clients.
You get the one from the Solana Foundation or whatever. And then you get
there's two clients currently. Another one's by Jito Labs, and that's basically like an MEV client, and it's like 99% the same as Solana Labs. So I don't really consider it to be like a differentiated client, but technically there are two right now.
So what is the FireDancer? Like, why is that more interesting than?
Because basically the way that it's explained by Toly and the FireDancer team is basically it's like they can now go back to all of like the quick design decisions that Toly had to make when he was first making the Solana Labs client and optimize everything. So it's really increasing, they're optimizing all the software of the current Solana Labs client. They're doing it with a completely different code base, so it definitely increases client diversity. And as a result, they're showing that they can get much better performance from even, lower grade hardware. So it has the potential to not only increase the performance of the network, but also bring down costs for being a validator on the network, which continues to be a major criticism of the network because, it is more expensive than...
It's a hardware intensive validator requirements, right?
Exactly.
Weren't there also a lot of like big NFT projects exiting Solana? Like, which were those? I'm forgetting now.
DeGods
is the main one, right?
DeGods was the main one. It's funny. I mean, I honestly feel bad for them because literally their founder tweeted out like, "We're leaving Solana," and like, "People be careful, Solana's down." We're leaving Solana. And that day, like, almost marked the bottom for like the Solana network. So like,
it was like last spring or something
exactly,
like that.
Yeah. So they moved over to Ethereum and Polygon, and I think listen, they made that decision. I think part of it worked out for them. NFTs are highly volatile, so it's just difficult to manage those type of things. But I think actually what we're seeing right now is that the NFT ecosystem in Solana is showing a huge rebound and huge resilience. I think it's number 3 in terms of volume on Crypto Slam I saw today. I think if you look at kind of the top collections, it's not like. It's no longer just like scammy collections that have been minted in the past month. I think when you used to look at Solana NFTs, the top collections were usually things that had been minted within a past few weeks.
There was no staying power.
Exactly. Now these are collections. I think all the collections were minted 5 months or earlier.
All the top ones.
All the top ones right now. And so, and also they're like, some of them are, social brand plays, but some of them are actually like product utility. They're related to marketplaces. They're related to centralized exchanges. So it's also a different type of NFT.
That's interesting.
And then finally, you also have this kind of innovation happening with these things called compressed NFTs, which is, they've brought down the cost of minting NFTs.
What is that?
basically they figured out a way to like they basically put like a Merkle tree on chain that contains like thousands to hundreds of thousands of
you
NFTs.
can deploy like a ton at once?
You can deploy, I forget the exact cost off the top of my head, but it's something crazy. Like you can deploy like 1 million NFTs for like $1,000 or less. Which is and that number might not be exact, right? It could be a little less, a little more, but it's a pretty crazy innovation.
Do you think we're gonna have millions of NFTs in this world that matter? Like, by the way, I asked that quite skeptically.
Yeah.
However, some people would say, like, depending on what types of NFT use case we're talking about, it could be absolutely yes.
I think there are some really interesting use cases for it. I think one place we've already seen it work is for like DePIN protocols that want to like make NFTs of like the hotspots.
What is DePIN?
Decentralized physical infrastructure network. So something like a Helium or a Render, where they have a ton of different people. Or for Helium specifically, they have a ton of different people that have these individual like wireless hotspots, and they were able to make NFTs of every one of those using compressed NFTs.
Got it.
I think sorry.
I was just gonna say like yes, Helium. I'm recalling this project. And I'm thinking about. I went on Saul Kadir's podcast on Layered. They were talking about this, and I was very critical of this concept.
As you should be.
Yeah, I think what I was saying. So this is what, like an alternative internet connectivity, right?
Exactly.
Like,
mobile phone.
Yeah,
plans.
we can bring like phone plans to people that can't get them, or like. Or more cheaply, but I was like, doesn't literally everyone on Earth have a cell phone? Like, isn't like it one of the most ubiquitous technologies? You could literally like buy a SIM card in the airport in like Nairobi and walk into the desert, and the cell phone will work. Like who needs this? Is what I'm saying.
It's not clear yet, but I mean that said, like a $5 mobile plan is pretty cheap. So they're offering $5 mobile plans. I think in Miami right now it's pretty cheap, and I also just think
that is cheap. To be clear, I use a major carrier. And it's much more expensive.
It's cheap, and what I think is interesting about that mechanism is what they're doing is they're saying, all right, we're gonna use the Helium network to power your mobile phone, but every once in a while we might not have coverage, so I think they fall back on T-Mobile network. But what they then do is they can track that, and whenever they fall back on T-Mobile, they can then incentivize people, like they'll increase the amount of rewards you get for hosting a hotspot in that area where the T-Mobile network had to be used.
It's like Uber.
Yeah, so it's a great way of actually building this network out over time. Because I agree right now, like, is it do I want to have a Helium network in the United States powering my phone? No, I want like something that's going to cover me everywhere. But if over time they can incentivize people to truly build out this network, I think it'd be effective.
So I interrupted you. You're talking about compressed NFTs and like your Helium hotspot thing might have a use case for this. Were there others that you wanted to mention?
I think the other interesting one is just thinking about NFTs as being things of an abundance instead of like very limited supply. And I think there's room for both. And one use case that really stands out to me is if you're like a YouTube streamer and you're a gaming streamer. Every day you play a game and you want to reward people who aren't just watching your YouTube but are watching the live stream. Maybe you start rolling out compressed NFTs and on like previously you'd have to pay thousands of dollars to do that. It's just not worth it. Now you're paying $10 to drop, 100,000 NFTs to people. And it's very marginal cost to you. And it's a great way to just drive user engagement. So I do see use cases there. Obviously, like a lot of people like to say NFTs should be really valuable. I think this is showing, well, maybe there's a use case where NFTs are just very cheap collectibles that people get for being loyal followers and things like this. And if you have a way to cheaply distribute it, I mean, it suddenly becomes viable.
Interesting.
Yeah.
What about when I think of some of the stuff that's been happening on Solana?
Yeah.
And so we talked a little bit about DeFi, and there's some struggles there, but I guess you're saying volumes are starting to pick up.
Yeah.
Are we going to get like the CLOB, the centralized CLOB? Like, is it still the net, or like, is the whole sort of vision changed, or
no,
is that still a thing? The NASDAQ on chain, or whatever you were saying?
Yes, that is happening in real time right now. There's a number of CLOBs already active on Solana. I think there's actually some great research coming out right now about like capital efficiency and showing how I think one example was like I think 70 million of the ETH USDC pair was traded last weekend on Ethereum, and to do that there needed to be like 40 million in TVL, or there didn't need to, but there was
on Solana. You mean?
No, on Ethereum.
On okay, yeah.
On Solana there was like 40 million traded in USDC Sol, and the TVL was 1 million. So you just have a much more efficient
Just
market.
faster and
you just don't need as much TVL to facilitate that much because you can have clubs and stuff. You don't purely need to rely on LPs and AMMs. So I think there is definitely a narrative driving that. I think we're going to continue to see a lot of growth in that area down the road.
All right, here's another question, and this was really making me angry. Gosh, I guess in 2021 when Solana was first on the scene and getting big, there was no data, right? The nodes are mega expensive. It's producing an enormous amount of data per day. I forget at one point someone told me like every day it produces like 100 gigabytes or something insane, right? So there was none of the crypto data providers had anything on Solana. There was SolScan, which is the sort of main Ether scan or block explorer.
Yeah,
it had some data, obviously, but like I couldn't even get numbers on like transactions over time. Like nobody had anything, partly because of the design decisions that are powering the scalability choices. Is that still the case? Like, can we get data on Solana
Definitely.
now?
Yeah, there's a very robust data ecosystem. You've got teams like Solana Beach, Solana FM, SolScan, Flipside, Artemis. There's a whole because they're starting to see real demand from users for that type of insight. So that whole area is building out. I actually, at Breakpoint, there was a great presentation by the Solana FM team. They're like a block explorer of kind of the integrations they've done with artificial intelligence to basically ChatGPT, their block explorer, and it's crazy. You can just type in whatever you want and it'll pull whatever you need. So I think we're seeing a lot more transparency
because it is an enormous amount of data to parse and index and serve up metrics on.
It is.
Like it's
it
crazy,
is. And I think most of it is like hosted on Google Bigtable right now. So I think that is probably something that over the next year or two is going to be continue to be an area of focus in terms of like, how do we deal with all of this?
Yeah, because one of my biggest angles at looking at crypto is show me data, show me adoption, right?
Yeah.
Like I don't care if no one's using something, but I become interested as it becomes used, and it was like I'm hearing that it's being used and I can't show it, I can't prove it. So like and that's an important feature of blockchains, that they're open and transparent, and it's like, if it's transparent, but the thing is like a 900-pound gorilla, you can't like wrap your hands around, then like it doesn't really matter if the data's there.
And I totally agree. And I do think one thing is interesting is that I think over like the past 2 years, obviously on-chain activity has been way down. And so a lot of the improvements that we've been talking about have just gone under the radar because nobody's using the chain. But if you are using the chain, you could see those updates and those developments happening in real time. I think, one of the things I said coming out of Breakpoint is the big challenge for Solana going forward is they need to get more on-chain liquidity. And at the time, I had talked about maybe a few things that might improve on-chain liquidity. So there is a huge DeFi airdrop season that's going to start rolling out in the next few weeks and will probably last 6 months or so.
What is this, new protocols or
This is new protocols and some older protocols that have been running basically liquidity mining programs. And, their view is, listen, we have ETH, they have all these tokens. It gave all these people liquidity to do stuff on chain. We need to simulate a similar
which is basically what
Solana.
Everyone has done on Ethereum and all the L2s. They all run these types of programs.
And on Solana, we haven't really seen that happen yet. So that was a huge that's a huge event, I think, that might increase on-chain liquidity. I think there's two exchanges that are launching, centralized exchanges that have actually very interesting integrations with blockchain, and they're focused on bringing liquidity to Solana. And then I think there's just a lot of people that are starting to see, obviously, like there's this reflexivity in crypto. Everyone's starting to see things pick up on Solana. There was like 3.5 million in bridged over to Solana over the past week. We're normally seeing like probably like a few 100,000 a week. So like activity is starting to pick up, and as a result, people are starting to go on chain on Solana, and they're starting to say, wow, this is kind of like a buttery smooth experience. Like this is the UX that I want as a crypto user. And for me, it's very exciting to see people like, you saw Kathy Woods go on CNBC yesterday and talk about how she thinks Solana is faster and better. That's very high level. But then you see someone like the Blockworks guy tweet out yesterday, hey, I just used Jupyter, which is Solana's leading aggregator for the first time. It's the best experience I've ever had in crypto. You see Jeremy Allaire, the CEO of Circle, yesterday go, hey, I just used Jupyter for the first time. It's the best experience I've ever used in crypto. So it's really about kind of getting on-chain liquidity so that people start using Solana and see that it does have a great UX, that it is as fast as people say, that it is as cheap as people say.
Interesting. Let's step back a little bit. And we talked about, I think we mentioned that, I think at this point now, Solana is sort of, I think many view it, I think I view it as potentially like the third chain, right? And you have Bitcoin and Ether and Ethereum and its ecosystem, I'll say, which is this growing amalgamation of layer twos primarily, right? Mostly optimistic and ZK rollups. And then you have Solana, which explicitly eschews the layered scaling approach.
Yeah.
I think one of the arguments I've heard, which actually makes a lot of sense to me, is like, well, if you have multiple layer twos, aren't you fragmenting liquidity?
Yep.
Right? And you're like, oh, well, you can bridge from here to there. And it's like, well, but then you have to bridge, like, right? It's like not, right? Capital likes capital.
And bridges get hacked all the time.
That's true. Bridges have been one of the most dangerous applications in crypto. Which makes sense because oftentimes they're trying to connect two unlike systems, right? So they're okay. So in that world, I think it's quite notable that the Solana community continues to grow, and that people are devoted. You really can't say that about other L1s. I mean, most are notably declining. Yeah, I mean actively declining, right? Like. Whereas it does appear that the community in Solana is growing, and of course there's growing interest. Like, do you think that Solana, is it competing against Ethereum? Is it competing against Ethereum and all the L2s? Like, because that Ethereum's very, very clearly focused on this layered scaling approach, this modular approach. In fact, modularity could be even more fragmented.
Yeah. So it's a great question. I think in my view, Solana is competing mostly with the L2s when it comes to Ethereum. I think, and then they're competing with other alt L1s. So, I mean, everyone knows them all out there. And there's actually a few launching next year that I think integrate a lot of the design approaches that Solana takes, but do it with an EVM. So I think those are Solana's main like competitors.
So alt L1s other than ETH, and then ETH L2s.
And then ETH L2s. And I think, you had Trey Islanian on here. I think he made a great point, which is like, listen, Solana is more performant than ETH L2s right now. It's a better experience. So the big risk for Solana is that they don't have like this like stellar product before ETH L2s get to that status. Right. And so I actually tweeted this the other day. Like, I think the benchmark for Solana, this chain this cycle is very simple. It's product. They just need products.
Things people want to use.
Exactly. They don't need to have a currency.
They don't need to go from 600 TPS to 1,000.
Yes, they just need like one or two products where people are like, wow, like this is something that I would use.
Can I tell you one that I've heard of in the Solana ecosystem that I'm actually quite excited for?
Yeah.
And it's something I've wanted for probably about 7 years. Is Uber on the blockchain.
Oh, yeah.
And there's a guy, Paul Bohm, who I've actually known for quite a while, who has a startup called Teleport, which is a Solana-based ride-sharing app, right? That is something I would use. First of all, I mean, Uber and Lyft, like ride-sharing apps are an incredible product experience, right? It's never – do you remember – I don't know, you're younger than me, but I used to have to like call a cab. I was in Boston. The operator would be like, 45 minutes. You're like, what? Now it's just like – I mean, I remember when Travis what's his name? Kalanick? He used to say like push a button, get a ride like that, get a car like that. And it is that simple. But to me, like, I mean, those companies have a huge take rate. I talk to the drivers all the time. Like, I mean, sometimes I don't know where it stands at all time, but like they're taking 30+% of the fees. And you're like, what service does Uber really offer the company? In my mind, it's two things. It's the software that we use to connect drivers and riders. And it's effectively the background checks on the drivers. But I was always thinking like, well, the software should not be an issue. This is really not that complicated stuff, right? Peer-to-peer, I think that could be done. The background checks, couldn't you have like a much smaller fee and have say a foundation whose sole purpose it is to conduct background checks? Like, it seems possible to me. I'm not even saying that you don't, some people have said you don't even need the background check. You could literally just rely on reputation. Obviously, the cold start problem is a problem there because if I want to start driving for the first time, I have zero and I, that first time driver could be any kind of murderer or whomever, and that's bad. But like, couldn't we obfuscate most of that? Have you looked at Teleport? Is Is this what they're doing?
This is exactly what they're. I haven't looked too closely yet. I did watch their presentation at Breakpoint, and it's exactly what you've laid out, and they've been working on it for a long time.
Because there are also a lot of like decentralized Ubers. I remember, not in this way, but I remember like there were some cities that had banned Uber, like, and so people would just like, there were Facebook groups where you could just be like, need a ride here, and somebody would come get you. Like that emerged in a lot of places where these apps were banned. So like. It's definitely possible.
I think it's totally possible, and I think actually an interesting thing like about that is it's complementary to other things that are being built on Solana. So you could integrate all of these like really fast payment networks that are being spun up on Solana to actually facilitate. Maybe you don't need to use Solana blockchain. There's a product called Hive Mapper that is basically trying to create
like
a
GPS
Google map.
and
Exactly.
whatnot.
So you can be a driver using teleport.
I was going to say, and they got the phone.
Yeah, exactly. And
what's up with the phone? What's the latest on this phone? This Solana phone? What's it, the Saga?
The Saga. I think the benchmark for the Saga is not so much like mass adoption right now. It's more like proof of concept. Let's just kind of incept this idea. What the real part of it is the SMS, the Solana mobile stack aspect of it, which is basically like an open source developer kit that you can build apps to use on things like Android. So I think the phone is kind of trying to like induce demand for developers to build more mobile native applications. And I think we're starting to see traction toward that during Solana's annual hackathon called Hyperdrive this year. One of the categories, they had a specific mobile category. And, just that hackathon in general, it had, the most participants of any hackathon for Solana ever. So another sign that you're seeing increased developer engagement, you're seeing more developer mindshare, and it's not just going to like building out infrastructure. It's going to building out AI products, to gaming products, DePIN, payments, mobile. It's all over the board. And that's what I want to see as someone who is interested in seeing Solana grow as a network. Is I want to see just a large amount of products coming out at all times so that users who are on the network can constantly be trying, iterating, giving feedback, and eventually really do find that product market fit.
I like that a lot of what you talk about and see out there in the Solana ecosystem is not purely financial.
Yes.
In use case, that is interesting. That's also pretty unique, I would say.
I think so.
In the world of blockchains, right? Lucas, before we wrap, you were on the podcast when I had the whole team come on a couple months ago. But can you tell us your background, how you got interested in Bitcoin and crypto and I guess Solana too? But like, tell our audience who you are and give our your origin story in crypto.
Yeah, sure. So. It's just a weird story, as with everyone. I started out I started out working in finance in New York out of college, did like an analyst program for 2 years. Great experience, loved it, but I had grown up internationally. I spoke Chinese. I've been taking Chinese since I was in 9th grade.
Still do, but used to too.
Yes, I spoke it much better then. I still speak it all right now. After 2 years, working in finance, I knew I wanted to be abroad, so I moved to China. I lived in Beijing for 5 years, and I worked at the Carnegie Endowment for International Peace as a U.S.-China foreign policy analyst. So I basically moved there right before Trump got elected, and then for 5 years watched the relationship just kind of crater and go off a cliff. But it was an incredibly, it was an incredible time to be there. It was really interesting being at the center of all of that, and obviously we're continuing to see those dynamics play out today. After 5 years, kind of knew that I really wanted to be more on the business side of things, not so much on the policy side of things. But I do love the research aspect because, I think what's really underappreciated in most lines of works is like getting below the surface level. And that's where you really get an edge. That's where you really find new, exciting, innovative ideas. And so at the time, I wasn't like a crypto native, crypto OG. I just kind of was like held a little bit of crypto and started going up in value. And I was like, you know what, like COVID's happening. I actually flew back from China the day that Wuhan shut down by accident.
So you were in the US.
I was coming back to the US to look at
stuck there probably
exactly
for years.
I was coming back to the US to look at MBA programs actually, and I get back the day that Wuhan shuts down. The next day, my boss calls me and he goes, "Hey,
don't return.
Don't come back to China." Never went back to China after that. I mean, I did go back this last summer because my wife is Chinese. She's the best. Shout out to Kelly. And so anyway, as I started to,
God, you really dodged a bullet on that COVID lockdown, because we saw the stuff in China.
It was,
I don't know what to believe. It was the internet. You never know, but it looked very aggressive lockdown situation.
It was definitely. I had a lot of friends who were there and kind of stuck it out for a while, but eventually
were they able to leave eventually?
Eventually they were able. Yeah, people were able to leave. It was more of just people kind of like maybe didn't have places to go and things. There's a lot of expats living in China who can't go. So it's tough. But anyway, so I came back. I did my MBA, and before I started my MBA, I kind of had a little free time, and I really just started to be like, all right, like if I'm invested in this stuff, I should understand what it is. And so I took like a Coursera course from INSEAD on like crypto, blockchain, and DeFi. Gave me kind of these building blocks, and then I had a buddy who was like, he like used to do like YouTube streams, he's like one of the, but great guy, love him. And he was actually, how you're discounting that. He was driving Grubhub and driving Grubhub so that he would take his profits from Grubhub and buy crypto. And he was, like, it was
grinding.
It was grinding. And I just reached out to him. I was like, hey, like, I kind of want to use this stuff. Like, and so, he basically introduced me at like the deep underbelly of crypto. So like I never started at like the Bitcoin ETH level. He was like, let's go to Polygon and
you went right in. Yeah, right in the dirty stuff.
Yeah, exactly. So but that was great. It really showed me like, all right, this is how communities are built in crypto. This is how DeFi happens. This is how you identify trends and narratives. This is how and what it really instilled in me is the only way to truly know what's happening is to be actually using these chains, and you never should be discounting any chain until you've tried it. So I was on Polygon for a while, and then I saw this mint happening on Solana that I thought, the art, literally I was just like, the art looks awesome. Why don't I try it? Did the mint and never looked back. It was the best. Actually, the mint went terribly. It was like, it took like 48 hours to actually get it done because the network kept getting congested. Mm-hmm. But once it happened and I started transacting on the network, just the difference between using Solana and using any other chain was so extreme. I was like, wow, like this is the user experience. Like it's still very rough around the edges, but this is kind of what you need. And so from there, I got very involved. I started out as kind of like an NFT community person, got very involved in NFTs. That led me to, get interested in all other areas of the thing. And as I was doing my MBA, I kind of just thought to myself, like, this is what I spend. I'm not even going to my class. This is what I spend all day doing. Yeah. And I love reading about it. I love researching it. I love using it. Why is this not what I'm doing full time? And was very fortunate to get connected with you and end up here. And,
I should actually remind our audience, because Lucas was an intern at Galaxy Research before he graduated from Georgetown MBA, and then, of course, now works at Galaxy Research. But you may remember, if you're a longtime Galaxy Brains listener, Lucas was on Galaxy Brains. It's actually your third appearance, I think.
Yes, it is.
Because you were on in summer 2022 telling us about MakerDAO.
Exactly.
Which is just another hilariously overly complex and not viewed project. But that gives a lot of interesting things to talk about. So, yeah, well, Lucas, thank you for coming to Galaxy Brains, and we'll connect again soon. Lucas Tcheyan from Galaxy Research.
Thank you very much, Alex. Good to be on.
That's it for this week's episode of Galaxy Brains. Thanks to our guest Lucas Tcheyan from Galaxy Research and Beimnet Abebe from Galaxy Trading, as always. Like I said, if you didn't check out our live show, it's in the feed. It's on our YouTube channel from last week. It was a lot of fun. Thanks to Castle Island and PubKey and Galaxy for their support. And we'll do it again. And until next time, have a great weekend. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.